Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. It's a TGIF.
Certainly is.
Let's make it a great one. Let's take a look at one of our 4 agreements. Always do your best. Take action on your ideas. Doing your best means to take action. You can have many great ideas in your head, but without action upon an idea, there'll be no manifestation, no results, and no reward. Market-wise, let's take a look at it out here. We had the Dow down 43, NASDAQ off 15, S&P's off 6.5, gold contract up $9.90, traded at $1,382 an ounce. Silver up 25 cents at $21.45 an ounce. Platinum down 8 at $1,468 an ounce. Copper flat at $2.99 a pound. Light sweet crude up 81 cents, trading at $99.01 a barrel. Bonds, you have the 10-year up 1 tick rather at 124.21. The 30-year up 5 ticks at 133.15. King dollar down 206 ticks, trading at 79.42. The euro up 40 at 139, and the yen down 53, trading at 101.31. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay. Cash S&P, folks, we're at 1839.77. What does that mean? That means a failure on the daily, failure on the weekly. Guess what? Benchmark out here that we're talking, the benchmark, folks, is on the 5th of February. That's where this baby's heading. The 5th of February, the low out there was 1737. What we had done, if we want to go over this whole market, this is what you had. From December 26th over to January 23rd, you go sideways. You go sideways at approximately 1850. Market couldn't make it higher. Distribution at those levels. Then what ends up happening? Market blows apart, goes from 1850, 1746, goes down 110 S&P points or 1,100 Dow points, makes it all the way back, comes all the way back, brings more bread into the marketplace. Guess what? It's gone. It's gone in 4 days. Bottom line, I suspect what you're going to see next week, you're going to see an expansion down to that 1737 mark. That's your S&P. We go over to the Dow Industrials. We take a look at the Dow. What you have with the Dow had never made it to its high. The high in the Dow, 2013, December 31st. We are at 16,065. The Dow is making it down to this 15,340 level. NASDAQ Composite. Now, the way the composite, we came lower. The composite at this point is still not in the lower range. The lower range in the composite is 4218, and right now we're at 4245. What it has done is that there was a spike high, folks, on the 22nd, which was 4246, and we're at 4245. Conservatively, I'd like to see it a little bit lower. Bottom line, is it going to be lower? Yeah, I suspect we're going to see this baby get down to the 3968 ASAP. Gold market. If we take a look at gold, what we had with gold is this. Gold goes topside yesterday, goes topside today. Bottom line is that we got to 1388. Gold is still running into the downdraft that was created last April. Last April, that's when gold went from 1,500 to 1,350. I suspect, guess what? It's going to back off out of these levels. It's going to have to build cars in order to get the higher price, no matter what's going on in the world. Bonds. Bonds, however, guess what? Bonds are going topside, and they're going topside in spades. The 10-year, what we have with the 10-year is this. She is right at the top of her range, 124.21. 124.28 is the top of the range. I expect she's going to blow topside next week. The 10-year will be running up to the 131 mark. The 30-year, right now, the yield on the 10-year is 2.6. The 30-year right now is trading at 133.15. She wants to run to 141. What you will see in news all over the place this weekend is this, folks. Inside the bond market, what you had is this. Our Federal Reserve holds government bonds, meaning, let's say that, well, I'll tell you specifically what it is. Russia. Okay, Russia had a lot of government bonds. Our government bonds, guess what? Because of what may happen over this weekend, they moved them out of the Fed, and that was the biggest movement out of the Fed that's ever happened. They didn't sell the bonds, though. Guess what? They didn't sell the bonds. They took the security out of the Fed so the Fed doesn't have hold of them. That's what happened. It was the largest withdrawal that quick ever. Dollar index. We take a look at the dollar index. What you have with the dollar index is this. Dollar index, King Dollar, got down to a price point today of 79.32. She closed at 79.42, and this is really wild because she only had to close at 79.355. At that level, guess what? She still wants to go topside. She's been rejecting lower price on a continual basis. When you put this all together, what you have here is this. You're going to, well, here, let's go do the DAX. We'll go to the DAX. The FTSE first. The FTSE closed down 25 in London. Right now we're at 65.27. She's making her way down to the 63 mark. The DAX in Germany, what the DAX in Germany did is that she closed at 9056. She was actually up a bit after being down, but guess what? The DAX in Germany had already broken the swing point from February 4th. She broke the swing point with volume again today from February 12th. That is saying that the DAX wants to run down to 8,500, and right now we're at 9056. I have a Tigress here with us, Laura Johnson. And Laura, welcome back to TFNN.
Thank you. I appreciate being here.
And this is the perfect time to get Laura back, folks. You know why? Because Laura specializes in retirement solutions, and she actually... Well, tell us what you specialize in.
Well, I specialize mostly in the distribution aspect of retirement. A lot of people focus on the accumulation, which we want to do that, the safe money aspect.
Yes.
But the sequence in which you take your money out for retirement is just as important as the accumulation phase. You want to be able to protect that money.
There's no doubt. And how do you do that?
Well, there's a couple of different ways you can do that, and we can kind of go into the details. It really depends on the situation that you're in and how far off you are from...
So, the last time we were here, we were talking about fixed income annuities.
Correct.
Okay. So, I think we should walk folks through, first off, what is a fixed income annuity?
Well, one of the there's several different types of annuities. A lot of people are familiar with perhaps just a pension annuity, where you hand in your money over to an insurance company, and then they give you a set of payments over either a period of time or a lifetime,
yes.
Depending. And that's what most people are used to with annuities. They think that you don't have access to your cash. Then along came, we had some variable annuities where your money was still at market risk. You could possibly put an income stream on it, but those you still, if you look at the investment pyramid, they're still high up there with like the growth stocks. They're still very risky. What I focus on more is fixed indexed annuities, where your money is going to be protected no matter what from market loss.
And this is important. This is really important because over the course of years, annuities have had good and have had bad.
Correct.
And this is so let's get into this a little to explain exactly what you mean by a fixed income annuity.
Well, it's really important that people understand that, because the term annuity just gets thrown around, and there's just so many different types of them, and you've really got to understand the difference before you get involved in an annuity. A variable annuity, your money's at market risk.
Okay.
Fixed indexed annuity, your money is not at market risk. It cannot go down. It can only capture the gains of the market, whatever index you decide to tie it to.
And so if I turned around and put $100,000 in a fixed annuity, and like the market tanked, I'd still have my $100,000, right?
You still have your $100,000, correct.
Now, let's say the market went up 10%. How much of that can I capture? Is there a percentage I can capture?
There's a percentage, and that's really important too, because inside the fixed indexed market, fixed indexed annuities are quite popular right now because of that exact protection of not participating in the gains, but protecting from the losses. That being said, there's just in the state of Florida over 500 different fixed indexed annuities.
There is? Yeah. 500?
Yes, yes. So I did write an article comparing what the returns were on fixed indexed annuities last year, and they ranged from 2% to over 20%. 20%.
Really?
Yeah, so you really have to look at them carefully in the crediting strategies. So a lot of agents will go out there and advisors will sell the sizzle part of it. They'll sell the idea of protecting against loss, but they don't go into the details of how that's credited, and that's really important.
Well, we'll get into that. You stay right there. Folks, if you do want to get hold of Laura, her phone number is 813-569-9222. Her number is right under breaking news at TFNN. You stay right there, folks. Laura and I are coming right back. We have the Dow finished down at 43, NASDAQ off 15, S&P's off 7, gold was up 960. We're going to be right back, folks.